What's going on, everybody? It's Kevin here from Stock Hours, and today I'm going to be bringing you guys a video on how you guys can begin to chart your own key levels. This video is going to be super useful for those of you who are beginners, especially for the ones who just joined the Stock Hours chat. Without further ado, let's get right into the video. Alright, so what are key levels? Key levels in the market are areas of price where there are often strong reactions at, right? And these are super useful to us because they can help us identify support and resistance, areas to avoid, and that's what we're going to be doing today, right? Is showing you guys how you can identify clean breakout areas. Okay, so there are two major key levels that we all pay attention to, and key levels, for example, just like I said earlier, are areas on a chart where we can see big reactions at. So for example, this 116 level. The other kind of key level that we also pay attention to are what we call these whole numbers, these psychological levels. Oftentimes when investors or the market gets down to a price or up to a price like 100, 105, 110, 115, 95, 90, round whole numbers just like that are areas where stocks typically like to gravitate towards to prepare for a consolidation to make the next move. So what we have right here on AMD is a little consolidation before we sell off, and then we consolidate at this whole number psychological level of 100, right? We consolidate once again before making a large move to the downside, right? Then we reclaim that level, consolidate more before heading back down, coming back up, consolidating, coming on further up. Now, these whole number psychological levels are important to us because they often provide really nice premium flips, especially if you're scalping. So with the right market context and market sentiment, most of the times when we look at these psychological level areas for breakouts, they often work nicely. Okay, so back to the first type of key level where we actually see reactions off of it, right? The reason why this is a key level is because we tested this once, we pulled back, came back and tested it once again and pulled back, right? So if AMD can get the right strength behind it, this 116 level should be a rather nice breakout. Now, it's super simple here to just sit here and tell you guys, oh, look for levels that have been tested at least twice. Look at levels that are psychological levels, like whole numbers of 100, 105, 250, things like that. Those are super simple things that anybody can tell you how to do. What this video is for is more in-depth analysis behind the key levels that you're trading. Because in hindsight, if you just look at this level, it's not a bad level to trade. But the thing is, if we put it on the bigger time frame and we look back, we can see that 116 isn't really the best level to trade a breakout at all, because what's going on right here is at 116 in the past historically in this 116 area, you can see we see a lot of choppy price action. And as a breakout trader, especially as a scalper, having the most smooth, consistent breakouts is what's really going to make you profitable. For example, if we go to Tesla here, and we go on the 4-hour, right? You can see right here between this 270 area all the way up to the 295 area, we have been stuck in a consolidation for about over a week now. If I put this on the 15-minute, you guys can see multiple areas where we have tested a key level twice, right? For example, right over here, there's a quote-unquote key level at 281, 280.50, right? Another key level could also be 288, right? Because this area has been tested twice, right? This right here at 295 is also a key level, and this right here at 270 is also a key level, right? All of these levels have been tested twice, and also some of them are also psychological levels, right? Look right here, 270, 275, 280, and then 295, right? Those were the key levels that we marked out, the quote unquote key levels, right? So technically we had like, what was that? 1, 2, 3, like 5 trading opportunities on Tesla. Now, just because there are 5 different key levels we can trade doesn't mean we have to trade them, right? And the reason why I said that market context matters is because if we look at the overall big picture on the 4-hour time frame right here, you guys can see that Tesla has been stuck in consolidation, right? So while on the 1-hour, some levels can look good. On the 30-minute, some levels can look good. If you're looking at the overall bigger picture, you will understand that everything in between this range of 295 to 270 really isn't the best breakout level at all. The real breakout areas begin at 295, which you can see to the left right here. If I just draw a rectangle around the 295 area, this is a rather smoother breakout area, right? There's basically zero choppiness at all in this 295 area and above it, right? But if we look back right here, there's consolidation in between 295 and 270. And if we look further back, that range is still choppy, right? So we don't want to force ourselves into a breakout situation, which could probably fake you out, and it just isn't a trade that's worth taking at all. You're better off staying cash on a day, for example, instead of taking a mediocre resistance break right over here in the middle of the range. So those are some important factors when it comes to marking out key levels to trade for your pre-market watch list and whatever it is that you're going to trade in general, right? And just to end this video off, just to give you guys some tips, even when you have intraday key levels, for example, like this pre-market high right here on Tesla, right? Where are we? On the pre-market high is 288.50. If I go to the 1 hour or even the 4 hour, we can clearly see that 288.50. We've broken through it basically every single day, right? So broke through this on what day is this? Monday, then Tuesday, Wednesday, Thursday, Friday, and then if we came back up to it today, would you guys trade it? Probably not, right? Because we've already been through this level so many times that there's basically no more juice left behind this level for a nice breakout for us. So as a breakout scalper, breakout day trader, whatever it is, why would we force ourselves into these bad positions when we can just stay patient instead and look for other setups from different stocks, or just staying patient in general, waiting for the next day, the next week for some better setups, right? The only things I really want to trade, or even stock hours as a group on Tesla, is really 270 and 295, right? Those are the big key levels that we're really looking at to trade next. Everything else in between this is just whatever. Doesn't really matter, right? So those are some important things to consider, especially when you're marking out key levels to trade on your watch list. Okay, now let's just give you guys another example, right? Let's just say there's a whole number right here on Microsoft at 390 that we want to play. Actually, let's just pull this even back further. Right, so 390 is a key level that you guys have on your pre-market watch list. Now, why would we not want to take this trade? Right, because everything in the past historically has shown you signs that this area has been used up a lot, or there's areas of congestion / consolidation happening at this critical 390 level. Just because it's a key level doesn't mean you have to play the breakout on it. There can be key levels where you can avoid trading. 390, for example, is exactly one of them, because what's going on right here is we have consolidations going on. And yes, sometimes you'll get sharp moves throughout these levels, but the right thing to do is analyze what price has been doing historically in this area, right? And this area shows me that it's very choppy, so I'm going to stay away and wait for a cleaner level to appear. So for example, if I zoom out on the chart, you guys can see right here we have 456 on Microsoft, and there's no price action from the past that's really disrupting this breakout. So this 456 is a lot more cleaner than what 390 was. And yeah, it might be a little bit far right now, but the patience is worth a lot more than you trading in between this horrible range and waiting for the best opportunities to trade in the market. The market isn't your best friend, and it's not going to be here to give you opportunities every single day and trade A+ setups. There might be 3 A+ setups at max on a week, maybe even less. So, sometimes some days are filled with A+ setups, but it's very rare, right? So this is very important for you guys, because in stock hours, what we preach is trade these A+ setups. But most of you are struggling with identifying the setups that are actually worth trading, right? And the reason why is because maybe some of you guys are too stuck up in the smaller time frames, looking at a key level that might actually look really good, but on the bigger picture overall, it looks horrible, right? So this is a super thing when it comes to marking out your key levels, creating your pre-market watch list, and just identifying setups overall. I hope this video helped you guys identify clean breakout areas, and if you guys enjoyed, make sure to like, comment, and subscribe to the Stock Arrows YouTube channel. I'll see you guys in the next one. Peace.